What is going on, everybody? My name is Baloo and welcome to the jungle. This is the channel where we take a very simple approach to technical analysis. We analyze the price in the context of volume, and we help you on your trading journey to hopefully teach you something to allow you to make better trading decisions. If that's the kind of thing that tickles your fancy, then why don't you hit the subscribe button? I do this every single day, except for the days that I don't. So in today's video, let's just take a look at Bitcoin. Let's see what's going on inside of Bitcoin right now. We've been overextended for a while. Fear and greed. If we just quickly take a look at fear and greed, we're at extreme greed. Now, if we take a look at the charts on extreme greed, every time we get up into this territory, we get a big rejection down to the downside. It's usually preceding a dump, but it is not a good indicator of timing. It is just kind of an indicator of severity. So if you're just getting into the space right now and you don't know what a stop loss is, go and figure out what a stop loss is and make sure that your stop losses are in a place that is somewhat appropriate. You don't want to, preservation of capital is really important inside of this market. It is extremely volatile, and it is not nice to experienced traders, and it is even less nice to inexperienced traders. So please be careful because we are in extreme greed. So along with that as well, I do also want to take a look at Stellar Lumens. XRP and Stellar Lumens, I'm going to do an update video on both of those. XRP will be tomorrow. Today, let's take a look at Lumens. But first, let's go ahead and take a look at the price of Bitcoin. So Bitcoin, if we zoom out here, we were climbing this ascending channel. It looks like we got a double bottom on the channel that forced the price action to come up and break through the channel. We had an indecision consolidation here. It was looking very distributional. It looked as though we were going to come down and test, but no, Bitcoin said no, and we ended up going to the upside. So right now, are we doing the same thing? We did get this kind of aggressive move to the downside here. It was, kind of just a tight consolidation and then a sign of weakness. I did have this interior trading range drawn on the lower time frames, but I'm just going to go ahead and just say that this is the main trading range right here. We have our buyer's climax right here. Let's go ahead and mark it down. Buyer's climax, automatic reaction, and our secondary test. So this is what defines phase A inside of any Wyckoff trading range. If you're interested in learning the Wyckoff method, I encourage you to join the free Discord down below. I've got a ton of free PDFs. Basically everything that I use to learn this method is all consolidated in one place inside of the free Discord down below. Along with that, as well as I do have a premium service for coin calls, but by all means, there's plenty of free material and a lot of traders on the free side of the Discord, so don't worry about that. So we are tentatively setting up for a further analysis inside of phase B. So phase B is where you analyze the volatility and you analyze the volume to see what where the characteristics lie. Is there more accentuation to the downside? Is there more effort being applied to the selling pressure? Those are the types of things that we're looking for. So phase A, really, there's not a lot to analyze inside of phase A. It doesn't give you any clues to either direction in phase A. All it tells you is the trading range. So that's kind of what I'm hoping for right now, is that we get what is called a second test in phase B, which would be down at the lower end of the range here, somewhere in this area. Second test in phase B, very, very healthy. If we get a second test in phase B, we can then consolidate above. Well, then likely, I know it sounds bearish, but it's actually the most bullish outcome, is when you break through the bottom of the trading range here and then get bought back up as a spring. You see it all the time where you get a couple touches, you break through, and you're off to the races. That's very typical inside of Wyckoff. You see it quite often, and that's what I'm going to be looking for if, in fact, this is an accumulation range. So What are we looking for inside of an accumulation range? Well, let's go ahead and zoom out a little bit. Let's take a look at another accumulation here. Yeah, this was a long accumulation. This is a fantastic example of accumulation. So inside of this area right here, this is our consolidation range. We have our buyer's climax, automatic rally, secondary test. That sets the range, okay? Then we have our tight consolidation. This is really good to see. If you see it really tight inside of phase B, that means that the volatility is not there. The composite operator, the composite man, whatever you want to call them, the consensus within the market is that we're going to continue to go higher. So everybody is accumulating at that point. And one of the main characteristics, along with the volume, along with the price action, is the decrease in volume up to the spring. So the spring is basically your phase C. We didn't get a piercing, here let me clean this up a little bit. We did not get the price action that I just described where we fell through the bottom of the range, but we did, you can see the volume increase. So we have the volume decrease here, and then all of a sudden we get a big volume spike, and that's basically our phase C. And phase C is the directional phase, and that's basically what's going to tell you what's going to happen next. What happened next was a big move to the upside. That move to the upside did end up being a little bit of a distributional pattern. The distribution came down. That was where basically my YouTube channel kind of started up here. I'm a relatively new channel. Started up here. We got our distributional pattern, a move down, and then we had our reaccumulation after a decline schematic right here. It's all just trading ranges, and these happen everywhere. So, you have a trading range, you analyze the price inside of the context of volume inside of the trading range, and it should tell you where the strength lies. And the reaccumulation after decline is the weakest reaccumulation that is inside of the Wyckoff method, but Bitcoin didn't care that it's weak and it continued to the upside. So that's kind of long story short on what I'm seeing inside of Bitcoin is it's just a wait and see. So we need to see a little bit more price action come in. We might get an up thrust where we overthrow to the top of the range. Those are typically an early characteristic of distribution pattern, and then you need to pay attention to what happens next. If you get a move, to the upside and you pierce back down through, that's very volatile. It's very uncertain. It's showing a lot of weakness, and we need to be careful. The volume overall is increasing. So that's right there, not the greatest sign for a continuation higher, because it is taking more effort to continue the price forwards. We're pretty overextended. So, what I'm seeing inside of the volume, what I'm seeing inside of the price, the bottom line is, when a new investor is entering the space, they're not looking at RSI, they're not looking at volume, they're not even looking at a trading view chart. They're just going to buy Bitcoin. So technical analysis only has so much ability. It can only ascertain so much. The price can just keep going up. So, yes, it's overextended. Yes, the RSI is overbought. Yes, the fear and greed is really, really high, but that doesn't mean that it can't keep going. So I'm just going to wait and see what is going on inside of this trading range, and maybe I could get a few scalps within the range, playing around with some futures contracts. We do offer a little bit of training inside of the group. If you are interested in learning how to trade futures a little bit safer, there is a way to do it safer. That's basically it for Bitcoin. So let's go ahead and take a look at XLM, Stellar Lumens. Stellar Lumens. So let's just start out the overall trend on that. Let's just erase the drawing so that you can see exactly what it is that I am seeing. So when you have a move to the upside, and then you have a move to the downside, you have a downtrend. What you're looking for after that move to the downside is you're looking for a break of that trend. So if I just spread this out a little bit, I can often find the break the trend by going to the peak, looking for another peak, and this is really I do this quite a bit. And this is a confirmation that, we're trending. We have a change of character. The change of character happened back here. This would be our seller's climax. We didn't get a ton of volume on the seller's climax, so this could be a redistribution. So we'll have to monitor what goes on with that. But basically, we have a change of character. We have a break of the trend. Now, we're going to kind of analyze what is going on further. So I'm just going to, we have that newly established uptrend. So seller's climax, automatic rally, secondary test. Pull that out. Open the channel up to the automatic rally. And let's drop down to the 4-hour, because I like the 4-hour a little bit better for interpreting the price and the volume. It's just a little bit more resolution. That's another thing that's really nice about the Wyckoff method. A lot of methods rely heavily on oscillators. They rely heavily on, different indicators, like RSI and, moving averages. And let's just pull up some stuff here. Moving averages and all of that kind of stuff. But here's the problem. It changes every single time frame. So that's kind of, that's limiting, because it forces you to stick to certain time frames on all of your analysis. Whereas if you're utilizing the Wyckoff method, when you zoom in on a time frame, you're just doing that. You're zooming in it as a resolution. So the emotion becomes a little bit more clear inside of the price action, but it's not going to affect your analysis at all, because all you're doing is you're still just looking at the price action in the context of volume, which is just a very good way to interpret the health of an asset. So we're inside of this ascending channel. We have our seller's climax, automatic rally, secondary test. Boom, phase A. Now, phase B, we want to analyze what is going on inside of phase B. And, we got a test. This is our second test in phase B. We got another test. That test was met with a lot of demand. So there was buyers coming in. They wanted to defend this trend line. We had a lot of people entering positions here. And that was a big move. So this kind of peaked out too. It's maybe even considered to be a minor spring, just because of the volume. We have a minor spring here, and you can see we came down, just barely poked through, and then boom, right to the top of the range. That's a sign of strength. So we have a sign of strength. We consolidated on top. We couldn't quite make it through, and then that was met with a minor sign of weakness. Not significant, but we did break the bottom of the range. So the buyers were not able to properly defend the demand line. So that's a minor sign of weakness. We got through, came back down through, and that may be a spring, because we got a lot of volume coming in. And when you pierce the bottom and get bought back in, you've basically created a spring. And now we've got our test, and the test is also confirming right on the downward sloping line. So this is actually a very advantageous place to This is a very advantageous place to take a position, because you can get a very tight stop loss on this. So if we just take a measure here, and we're at the bottom of the range, buying at the bottom of the range is a very safe place to buy. And we go to the previous low back here. Yeah, we've got about just over a 10% move to the downside. We would want to place our stop maybe just a little bit looser, give it some room. If you guys are familiar with using stop losses and you find yourself getting stopped out and then the price leaves without you, cut your position size in half and double your stop loss. Give yourself more room. Give yourself more than what you're used to giving yourself, and let the trade play out. When you give it double the amount of room, you allow for the price, you allow for your position size to go down further, but you've also cut your position size in half, so your actual risk is exactly the same. So it's like you're placing the same trade, you're just cutting down on your profits. So, but it's, you don't get any profits if you get stopped out. So having a position that actually works out is always going to be more profitable than one that doesn't. So that is what I'm seeing inside of Stellar. I may jump into this. The only thing, we need a decision in Bitcoin, and I don't see us getting a big follow through in Bitcoin just yet. Now, of course, things change rather quickly inside of the crypto space. So by the time you're seeing this video, it may already be obsolete. But for what I'm seeing right now, it's a no-go. So anyways, that is all the time I have for today. If you enjoyed the content, please leave it a like. It really helps out the algorithm. When YouTube is deciding who to show my videos to, it's going to pair up the videos that you like with other videos that you have liked with other people that have liked those videos as well. So if you think that I make quality content, please just leave me a like. And if there are any projects that you would like me to take a look at, leave them in the comment section down below. And until next time, please trade safe out there. It is a jungle. Peace.